What can our markets do as India pursues its goal of self-reliance in critical minerals? Can we develop financial instruments that help finance and de-risk the exploration and mining of these vital resources? So what's the way ahead? The journey from mines to markets is an ongoing one. Strengthening India's commodity markets is high on SEBI's regulatory agenda. We have, in fact, I would rather say, development agenda. We have already constituted a committee to recommend measures for deepening the agriculture commodities segment. We'll also constitute a working group for developing the non-agricultural commodity space, including metals. And we will bring all stakeholders, including many of them who spoke today, the investors, the metal makers, the producers, the financiers, into one group to see where all problems are and where are the pain points and where the development possibilities of market making and so on, and what role each one can play, including SEBI. Our approach will be multi-pronged. First, we'll continue to strengthen the integrity and safety of our markets. Measures like real-time margin collection and continuous monitoring are non-negotiable. Second, we will foster market development and innovation. This means encouraging our exchanges to constantly evolve. As metal derivatives grow, other peripheral services, for example, advisory, intermediation, financing, warehousing, and logistics, are also likely to grow in parallel. Third, we aim to deepen and widen participation. Our markets are for large corporations, traders, importers, and SMEs. They are also available for institutional investors like mutual funds and AIFs, who are increasingly recognizing metals as an asset class that improves risk-adjusted returns for investors. And there are indeed some suggestions that MP has made today also, and maybe going to make, in regard to what we can do more. Enhanced institutional participation will bring in higher liquidity, making the market more attractive for hedging. We will keep working towards a regulatory framework to enable prudent institutional access to these markets. A proposal to allow FPIs to trade in non-cash settled, non-agricultural commodity derivative contracts is also currently under examination. We will also engage with the government to consider banks, insurance companies, and pension funds to trade in these markets. By December 2025 end, we will include commodity-specific brokers in the Samuhik Prativedan Manch, a common reporting mechanism for compliance reports. This will ease their compliance requirements. We have engaged and will continue to engage with the government to resolve GST-related challenges for participants who wish to receive or deliver commodities through the exchange platform. Fourth, we will run targeted awareness and education programs to make these markets more accessible and relevant to all. So the road ahead is exciting and challenging. We need to rapidly move from being price takers to price setters. We are aligning our markets with national priorities like Make in India and the critical minerals mission. We are building an ecosystem that is resilient to global shocks and responsive to domestic needs.